Hey, welcome to the 40 Finance channel, everybody. Today we're talking about the QQQ and the TQQQ as it pertains to the shares that I hold in my own portfolio. These are positions that I started late in 2021, across 22 and into 23. So sort of a suboptimal time, if you will, to be into the Qs. But for me, I started these positions because I was just fed up with getting annihilated on individual stocks during the peaks and valleys of COVID. So I started to switch my attention to the Qs. And if you're a regular viewer, you know that I have dug into the Qs several times over the past 12 to 18 months. And I'm still convinced that these top 100 stocks of the NASDAQ are the true leaders for the foreseeable future. Obviously, we're going to have different periods like we saw in 2022, maybe with energy stocks, some other components, depending on what happens with recession and inflation. You could have staples, materials, etc. But at the end of the day, when you want to talk about who's going to win the next decade, right? In my personal opinion, those stocks are represented very well in the QQQ. And going along today, we'll be using Seeking Alpha Premium as always for our data and our charts and our projections. If you're interested in learning more about the stock research platform that I use every single day, my affiliate links in the description get you a great deal on an annual subscription as well as a 14-day free trial to test this one out. So definitely check that out. But kicking off here today with the regular Qs, we got a price of $349.78, up very slightly coming off of the long Memorial Day weekend. And my cost basis on this one is $346.80. So I am officially whole, at least for today, on the QQQ with my cost basis up very slightly, and currently I hold 63 shares of QQQ. All right, taking a look at the TQQQ, which is the 3x leverage version of the Qs themselves. Current price today is $35.37. My cost basis across 210 shares is $35.59. So I am literally just pennies short, I guess, of being whole on my TQQQ investment, which, by the way, spanned through some of the biggest drops that we've seen over the past 12 to 15 months or so, something like that. So getting very close to whole on the TQs. We all know that this stuff can change every day. But let's take a look at the underlying stocks that are within, that make up these ETFs, and try to see where the strengths and weaknesses are with the names and try to make a projection going forward. All right, now one of the ways that I like to analyze the Qs, if you've watched the channel before, is using this mock portfolio that I created in Seeking Alpha. So you can see it says QQQ top 50%. And this is all of the stocks that equal the top 50% of the holdings in the QQQ. Now that's a market cap weighted ETF. So some of these names are actually a much bigger portion of the QQQ than others, but as a whole it gives us an idea of where things sit. And what I've done on this particular one, this is the performance tab in Seeking Alpha, I've sorted by year-to-date performance. Okay, and right off the bat, NVIDIA is in the news quite a bit right now with the AI revolution, if you will, going on. You also have Facebook plus 117% for the year, and AMD plus 96% for the year, and Tesla plus 56%. So those are our big four performers that have really led to this turnaround. Now that's all great news, but we also know that the stock market fluctuates and things that are hot today may not be hot tomorrow. And when you look at just a 52-week range based on year-to-date performance, you're still a little short on the NVIDIA side. 52-week high was 419. Meta came in at 268, and AMD was at 130. So with that in mind, we are coming up on our 52-week highs. So you have to wonder what the resistance point is going to be for some of these stocks. But I think suffice to say, any rational investor would probably say that these three stocks have made their run for the year. But if we go down to Tesla, and again, this is one of many ways to look at things. Tesla's 52-week range puts it at $315 near the top. So depending on what your belief is, they still have room to run. And if we go down to the bottom, or let's do this, let's sort year-to-date performers. And the big laggard, which unfortunately I also own as a standalone stock, is PayPal. 52-week high of 103, okay? So is there room to run in PayPal? There's a lot of people talking about it. I personally believe so. I believe that as we get certainly into the fourth quarter holiday shopping time, barring any sort of economic catastrophe, I think PayPal, slowly works its way back to $100. We'll have to see. Next, we have T-Mobile is the only other top 50% stock in the QQQ that's actually down for the year, minus 3.46%. Then we have Qualcomm, just edging, depending on what day you look at it, just edging above par. Same with Pepsi, Costco, Intuit, and Intel. Now, how much room is there to run in something like Qualcomm, knowing what we know about the semiconductor industry getting, absolutely flattened over the past year or so, but now maybe starting to make a comeback, especially if corporate budgets start to turn in the right direction, right? We have very limited CapEx budgeting going on in the market right now with corporations, right? How much are they going to spend on new pieces, parts, and involved chips? If that tide starts to turn, Q3, Q4, Qualcomm certainly is a candidate for room to run. Then you have Cisco, which I think I confused with Costco earlier. Cisco, I wouldn't expect a whole lot. Same out of Intuit, same out of Intel. Now here's Costco. Year-to-date performance of plus 10%, still 60 some odd dollars off of their high. Will there be room to run for Costco? I wouldn't put it out of the question. I mean, Costco's done a really good job of outperforming expectations for a long time. I mean, I was absolutely shocked at their performances over the pandemic and how they kept building incremental sales. We'll see if they can keep that up. Now, scrolling through the rest of the list, looking for other potential opportunities, you'll hear some folks talk about the potential for Amazon. It has run 43% already this year. It is still off of all-time highs. But it's, in my opinion, it's a longer-term game, and a lot of it on the multiple is going to depend on AWS corporate sales. We'll see if those things get back in gear. All right, now let's switch over to the valuation tab here and see how things look. And for me anyway, if you're at least going to go PE ratios, I'm always looking for the PE ratio forward to be coming down from where we are on the trailing 12 months, right? The rear view mirror, the windshield should have a brighter view than the rear view mirror. That's kind of what I'm looking for here in the eyeball test. But if you take a look at Amazon, for example, yes, PE trailing 12 months of almost 300. There's not a lot of people who are going to call that a deal. But you are heading in the right direction on the forward side to 77.19. A lot of folks would like to see that cheaper, but it is something that I would say is a positive. Intel didn't even make positive earnings over the past 12 months cumulatively, and now they're trending towards the 69 mark. They still have a lot of work to do, but at least, again, it's inching in the right direction. Then you get into NVIDIA at a 200 times trailing 12 months, dropping down to 50 on the forward view. Not much different in AMD, 534 trailing 12 months. That's a huge number. And now you're talking about a forward guesstimate of 4408. Costco holding flat. Microsoft, that is in many discussions for being, overvalued after their AI run up. They're not making a huge amount of progress in lowering the valuation multiple. However, it is projected to go down slightly to a 34x on the forward times. And I think the key for Microsoft, obviously, is just bumping up that EPS best that they can. We'll see if they can pull it off. Netflix going from 40 to 33. How about Apple, right? Apple, who always is going to struggle. They're so big that they're always going to struggle to grow revenues, but they also do stock buybacks and a lot of other things to grow their EPS line. Now they're at a 29 times, call it 30 times, and right now that looks to be about flat on the forward view. What's interesting with Apple though, at least when they're firing on all cylinders, is they typically beat their earnings estimates. We'll see if that continues. Adobe headed in the right direction from 40 to 27. Who else do we have here? Google still under a 30 on the trailing view, 23 on the forward view. There's a lot of people who are wondering, what does AI do on the Google side? On my end, I would consider AI to be a bonus for Google. It might shake up the landscape in the short term. Nobody has more resources than them. No one has more data than them. So what a better use case for AI besides Google's data set, I don't know if there is one. Then you've got Meta, 3254. Forward PE, well in a sound range of 22 times. Then you go down to the bottom few, and things look even brighter for something like a Comcast, 30 down to 10. Then you got PayPal, 25 times on the trailing mark, and yet only 12 times on the forward. So some promising numbers if at least you're looking for multiples coming down in the future based on EPS growth. Okay, so what's my projection for the Qs as we go into these last 6 months of the year and even further out? I'm finally back to par on about $29,000 of asset purchases, but it's a mixed emotion for me because as much as I want to hold on forever, so to speak, I've also incurred a lot of single stock losses like many of us have. So do I protect against the downside and take my par, my 29 grand out and just consider myself lucky? That's an option. For me though, the more likely option, let's just say we have another run up in the Qs. Let's just say another 10% over the next 3 months or so. And that also makes the assumption that, it's a relatively upward curve, so the TQQQ is going to run well with it, as opposed to a choppy curve, which would really hurt performance of TQQQ. What I would probably do in a situation like that is take some profits from the TQs. Okay, I yet do not hold 100 shares of the regular Qs, which is something that I've been aiming for in these rocky times when everything has been kind of down and out in my portfolio. So I'm super interested in getting to the 100 mark on the regular Qs, mostly because the options premiums are very rich and you don't have to go overboard to make, let's just say a basic dividend off Q's options. The TQs, on the other hand, just because the share price is so low, right, $35, even with 210 shares, there's not a lot of juice to squeeze there. So I'd have to think about, should I just cash out, take a small win, and slowly build out into the Qs? Not worried about it today, but it is something that I'll be watching very closely if this market continues to run hotter. Now, I do think the good news is building through the end of the year. But however, like everyone else, it wouldn't surprise me if NVIDIA loses 10 to 20% of its $400 share price at any point, right? It's riding so high right now. And we also need to see a little bit more out of mid caps and small caps. Some of my stocks that are in there, while they've gone up from lows, they're certainly not trending on the same path that FANG stocks are. So I'd like to see a little more support from there. It'd make the rest of my decisions a lot easier. But all in all, I'm happy to be back to whole. I also know that, I could put this video up and there could be a negative news thing come out. We got the debt ceiling going on right now. You still have war across the country. You still have the threat of oil prices, gasoline prices, putting stress on the American economy. So the threats are still out there, but the threats are always out there, right? There's always something that could drag the market down, and there's always something that can push the market up. The one thing that I do really like about where the Qs sit today is this AI revolution that's seemingly getting started. So even if you don't believe AI is going to change your life or change much of anything over the next 2 to 3 years, you have to think back on similar revolutions, right? Even recent ones, whether it was Bitcoin, EV cars, you name it. While those things were hot, the market was very hot. And right now AI is hot. And if it continues to make headlines, then you're talking about a huge potential for the Qs to keep moving upwards. All right, guys, let me know what you think about the Qs going forward. Before you go, don't forget to check out that special offer for Seeking Alpha down in the comments. Potentially support my channel as well. I hope everybody's doing good. We'll see you on the next video.